Good morning, everyone. Good morning, and welcome to your live virtual revisionary classes for auditing. And I hope all of you are doing well. And we will be doing chapter number 7 and chapter number 8 today. And I assure you that you will, by the end of this lecture, you will be much more confident in these two chapters and you will have a lot of recall value and a lot of things would start coming to you once we have done the revision. So sit upright, don't lie down on the bed, sit upright, uh, be alert, keep your notebook, pen, and books in your hand, and then we can start with the lecture. So just quickly let me know that you are able to listen to me and I'm audible and I'm visible. So if you can let me know, we can start with the lecture. Okay. Okay, so I assume there's no problem and I can continue. All right, so let's start first that chapter number 7, completion and review. Okay, so before we start the lecture, think what are the main important essays of this lecture. First important thing is essay 560, 570, 580. These three, and then there is 260, 265 and 450. Okay. So these 6 essays make up this chapter. All right. So let's first see what are these 6 essays. The first essay is subsequent events. So let me tell you this quickly about one or two keywords or the key concepts of this essay, and then we'll go to the question and answers. Okay. So essay 560 is about subsequent events, which talks about events that occur from balance sheet date to audit report date. Okay. Events that occur from balance sheet date to audit report date, how to do, what to do about it. So there can two things can happen. Either they can be adjusted or there can be a disclosure made. All right. So these two things are the main things about this essay and how an auditor deals with it. This is the responsibility of management and we are checking whether management is doing their job properly or not as per AS4. Now, essay 570, what does it talk about? It talks about going concern. Here, auditor has to see whether any uncertainty exists. Uncertainty exists, which is material. Which is material. Against what? Against going concern assumption. Whether there is any uncertainty regarding going concern assumption. All right. So here SA 570 is about that whether the going concern assumption evaluation by the management is correct or it appears to be inappropriate. So this is what the SA 570 tackles. Now let's talk about SA 580, which talks about written representation. What is written representation? That it is given by management of the company with respect to anything that we are asking them, and it mostly works as a corroborative or supportive evidence. It works as a corroborative of supportive evidence. It means I can ask management to confirm anything that I need, and it works as a corroborative and supportive evidence. Now let's see essay 260. 265 and 450. What do they talk about? Firstly, essay 260 talks about communicating with TCWG. What is TCWG? Those charged with governance. So here the point is that as an auditor, I mostly work with management. But in some situations, I might have to go and talk to TCWG. So in that situation, how do I follow the process? For what things can I go to TCWG? For what things I cannot go? How can I communicate with them? What are my responsibilities? All these are covered in essay 260. What is 265? It is like an addition to 260. Here you talk about significant deficiencies. Significant deficiencies in internal control. You are going to talk to management and TCWG about significant deficiency with TCWG and management about significant deficiency in internal control. What does it mean? It means that as an auditor, my job is to give true and fair view on the financial statements. My job is not to give an opinion on internal control. But when I am doing the process of auditing, I do test of controls. I come across internal controls while doing my work to find whether the financial statement show true and fair view. So while doing that work, I might come across some severe problems in internal controls. And that, if I have to communicate, how do I communicate? What is my responsibility? That is covered in essay 265. And what is essay 450? Evaluation of misstatements. So if you have found any kind of misstatements during the audit, what do you do with it? Some can remain corrected, some can remain uncorrected. So I have told you a basic overview of all the 6 essays that we are going to revise in this Q&A session, revisionary session of chapter number 7 first. Okay. So essay 560, just remember subsequent events, essay 570 going concern, essay 580 written representation, essay 260 communication with TCWG, essay 265 significant deficiencies, communicating significant deficiencies in internal control with TCWG and management, and evaluation of misstatements corrected and uncorrected is essay 450. Now let's start with the question. Everyone present here, be actively engaging. Let it not be a one-way street. You can also engage with me when I ask you questions. You can involve so that you have better, time learning. Okay. So let's go. So question number 1. What is happening in question number 1? Let's see. So whenever we see any question in exam, how to approach it? Okay. Understand this first. Even if it takes you 10, 20 seconds, 30 seconds extra, don't be very hurriedly looking at the question, because if you understand the question correctly and if you understand the requirements of the question correctly, then you will be able to write answer. If in some hurry of reading questions too quickly or just overview doing the question, you may miss something important and you may miss what the question is asking for. So never assume what the question is for. Always read it fully to know what the question is asking from you. That should be the aim. All right. So let's peacefully see the question, because even if it takes 10-20 seconds extra, we should understand the question properly. So CA Yash is conducting audit of the company for 2023-24. What is company doing? It is engaged in the export of ethnic rugs to buyers in Europe. All right. The auditing is nearing completion in July 2024. Let's create a timeline. Okay. Let's create a timeline. When is the financial statement? It is 31st March 2024. Okay. All right. When is audit completing? Audit is completing in July 2024. Okay. Has it completed? Is audit report already done? So audit report is not yet issued. Okay. These are the important points till now. However, it comes known to the auditor that one of the overseas buyer has made a legal claim against the company on 1st June. So when has this claim been made? June 2024. So it is before the audit report, the claim has been made. For injury caused to a customer of one of the European buyer due to substandard dyes used in the rugs on one lot of order shipped in August 2023. So when was the rug shipped? In August 2023. So here I am breaking down my question into an understandable way. Okay. So what is the thing? Rug was sent on August 2023. The financial year is this. The uh, claim was filed by the European buyer in June 2024. An audit report is about to be finalized in July 2024. It is still not finalized. Okay, so audit report is not yet finalized. The management of the company has decided for an out-of-court settlement of rupees 5 crore to protect its reputation. Okay. The financial statements of the company are silent on this issue. So how should Yash proceed with this? See, in the question, it is not mentioned that for which essay the question is. So first, our job is to understand and identify that this question is regarding which essay. See, now I am teaching you essay, chapter number 7, so you are easily able to guess that it must be essay 560. But when you are studying the whole question paper, then it becomes important that amidst all the chapters mixed together, we need to identify. So, of course, this is for which? This is for essay number 560. Okay. So, one of the student gave answer, Kavisha, correct. So, this question is essay 560. What is the name of essay 560? Subsequent events. So if you were able to identify this itself is good. Okay. This itself first important thing we have finished. Okay. So this is a question of subsequent events. Now, which situation is there? That event has occurred between balance sheet date and audit report date, and audit report is not yet issued. Audit report not yet issued. So this is the situation, which means it's not a complicated matter. When does the matter become complicated? That you have given audit report also and financial statements have been issued. So right now, none of these things have happened. So it is a straightforward situation that balance sheet and audit report, in between that something has happened. Audit report is not yet issued and they have not done the financial statements are silent on this issue. So as an auditor, what would you do next? Okay. So this is an example of essay 560. Usually what will be auditor responsibility? Think of it this way. I am doing keywords first and then we'll see the main answer. In this situation, what will be the auditor's responsibility? First, an auditor has to see that is there sufficient appropriate audit evidence to see that all events are identified. Why do we need to do this? अभी एक पता चला है, पता नहीं और कितने हैं. Okay. Now I have come to know of one event. We don't know how many more events are there. So अभी एक का पता चला है. One, we have come to know about this 5 crore settlement and about this legal claim. Let's see how many more have happened. So first we have to do audit procedures to find appropriate, sufficient and appropriate evidence that how many more such events are there, whether they are properly identified or not. So if they have been identified, if yes, chalo, identify management has done all the identification, whether they have been given correct either adjustment or disclosure. So if the adjustment is required, adjustment has been given. If the disclosure was required, then disclosure is given. So whether this is appropriately reflected in financial statements. And okay, I have found that all events are identified. If yes, adjustment is done or not. And lastly, the most important thing, take a written representation from management. So before we see the answer, before I show you the answer and we read the answer, What did we analyze? That in a situation which is as of now smooth, or audit report is not yet issued, we have found something. What do we do next? What do we do next? First, we do the audit procedures to identify, to see whether sufficient appropriate audit evidence is available regarding all events that require adjustment and disclosure are identified or not. If yes, if means if they have been identified, whether correct adjustment or disclosure has been done or not, and it is appropriately being shown in financial statements or not. And regarding all of this, whether management written representation we can take or not. So usually you have to take written representation, because even if you try, it is very difficult for us to identify everything. So we have to take in writing by management that it is your job to identify all the events, to give all the correct adjustments. So give me in writing that you have done all your job. So everyone is clear with the question and the basic keywords? Can you quickly tell me yes or no? Everyone is clear till now? So this is how we break down a question in our head first, okay? So when you break it down like this, you will be able to understand it better. Now let's see the answer. If you'll see the answer, it will become very easy now, okay? Let's see. In the given case, the auditor has come to know of a legal claim against the company. See here, before the issue of the audit report. So here, what are we starting with? Just write down like this. We are starting with facts of case. Okay, what are the facts of the case? Okay, and our analysis. What is our analysis? That legal claim has been done before the issue of the audit report. So we are mentioning facts of the case, and our analysis means we are identifying it is of which essay. It has come to his knowledge that management of the company has agreed to an out-of-court settlement of rupees 5 crores. It is an example of subsequent events. See, here you identify the main. So you identify. So what are we doing? We are writing down the facts of the case, which means that we are copying from the question. What is the case about? And we are identifying, we are analyzing what is the case about, and then we are writing the, identifying the essay. So it is an example of subsequent event between the date of financial statements and the date of auditor's report as per essay 560. So you compulsory have to mention the name plus essay number. Okay. You have to compulsory mention name and essay number. Then if you don't, you lose marks. Okay. Auditors, now let's talk about, so what is the question asking? How does an auditor deal with it? Okay. So here it means we are talking about auditor responsibilities. Okay. In this situation, what is an auditor supposed to do? So hence we are talking about auditor's responsibility. So auditor's responsibility regarding subsequent events between the date of financial statement and date of auditor's report are as under. Remember, I've already told you this answer in short, okay? Here we have seen that sufficient appropriate audit evidence has been found and all events are identified, okay? If yes, adjustment and disclosure is done appropriately and written representation. Now see the same points. Perform audit procedures designed to obtain sufficient appropriate audit evidence. So many times in exam, students make this mistake that they do not use the language correctly. They'll write whether auditor has done audit procedures to find audit evidence. When you use such layman terms, it is not the correct way of writing audit answers. See, when you're writing answers, a certain kind of language is expected, okay? Every profession has a language. So I'll give you a small example. If you go to a doctor, okay? So suppose Abhishek has gone to doctor, okay? And Abhishek says, sir, I'm having some pain in my left side of the stomach. You are saying as a layman, but when a doctor talks to a doctor, how will the doctor say that the patient is complaining about an acute recurring pain in the left abdomen? Same thing, right, Abhishek? Same thing, right? But when a doctor talks to a doctor, they have a language of communicating. Same way when you see any lawyers, if you see the legal judgments, there is a way of communication. Same way as auditors, we have our own language and we have to use that language. You cannot say just because it means the same, you should get full marks. No. You also have to write like an auditor. You have to use the language of the auditor. That is also 50% of your uh, development as an auditor. As an auditor, it is not just about knowing the essay. It is also about reporting it correctly. It is also about knowing the language of the audit. And that is why I always tell to students that it is not just important that you are right. It is also important you are appropriate in the language. So you have to use these words. You cannot just write that I have done audit procedures to find audit evidence. If you write like this, you will lose marks, I can tell you. Okay. So use the language of being an auditor. Talk like an auditor. Write like an auditor. Okay. So perform audit procedures designed to obtain sufficient appropriate audit evidence that all events occurring between the date of financial statements and date of auditor's report that require adjustment or disclosure have been identified. Okay. So this is the main important thing that you need to remember. If they are identified, if such events require adjustment or disclosure, that have been identified, then each such event is appropriately reflected in the financial statements. Again, this point we finished. And obtain a written representation from management or those charged with governance that all events occurring subsequent to the date of balance sheet for which applicable financial framework requires adjustment or disclosure has been adjusted or disclosed. So get all the information and in writing, get it from management that they take the responsibility that whatever needed to be identified has been identified and whatever needed to be adjusted or disclosed appropriately has been adjusted or disclosed. Everyone clear? Can we move on to the next question? Everyone clear? Can we move on to the next question? Okay. All right. Now again, let's first break down and understand the question. Then we'll go to the answer. All right. So ABC Private Limited is a manufacturing company is facing significant financial difficulties due to downfall in market and increase in cost of production. So there is downfall in market, there is increase in cost of production. Okay. CA Ram, the auditor of ABC Private Limited, has identified the following condition. Company has defaulted in loan payment. Current liabilities is exceeding current assets by 50%, which means adverse current ratio. What does this actually mean? Current liabilities exceeding current assets by 50%. It means it is adverse current ratio. Sales revenue has declined by 30% compared to the previous year. Management has not yet performed an assessment of company's ability to continue as going concern. Here to in question only they gave you. So you quickly tell me for which essay this question is. In question only they gave you. Okay. So sometimes you will get in the question itself. Then they are just expecting you to know the procedure. That time they're not expecting you to identify the essay. Here they have given you the essay number and name. They're just expecting you to know the procedure, what to be done. Okay. So management has not yet performed an assessment of company's ability to continue as going concern, but they provided assurance for implementing correct measures like cost cutting initiative, discussion with creditors for restructuring the loan. What additional audit procedures need to be performed by CA Ram in accordance with SA 570 when such events or conditions are identified? So let's understand this. Some situations, events or conditions have been identified. What has been identified? That sales are down by 30%. The key ratios are in adverse, like current ratio is in adverse. What was the other condition? That they have defaulted in major loan payments. So these conditions have been identified. Now we have to see that whether it casts a significant doubt on entities. See the language also that I'm using. On entities ability to continue as going concern. Okay. See whether there is any uncertainty. See whether there is material uncertainty regarding the entity's ability to do the going concern. How to find this? See, you have automatically come to the point of the question that events conditions to identify हो गए, कुछ तो गड़बड़ है. Okay, some problem is there. Now I have to see whether these conditions are significant enough that they can affect the going concern. How to do this? What to do now? So first you have to do is, I cannot assess the whole company and each and everything. Who has to do the assessment? First tell me. Going concern is a fundamental accounting assumption. Everyone agrees? What is going concern? It is a fundamental accounting assumption. So whose responsibility it is to check that going concern is valid or not? It is management. Now I have found something. I have found some indications. I have found some events and conditions that can or cannot affect. So what will I do? I will start assessing the whole company and its valuation and all its problems. No, I'll go to management. Think logically. I have found some conditions. Where will I go? I'll go to management. Okay. So I will go to management and I will tell the management to make assessment. If they have not yet made assessment, make the assessment regarding what? Entities' ability to continue as going concern. So I'll go to management. Hey, it's your job. Do the assessment. Let me know whether entity is able to continue as going concern. Okay. Then suppose management, after doing the assessment, they realize, yes, our company is in some trouble. We have done the assessment. These are the areas of impact. So now you ask, what are your future plans? Okay, you have found, made the assessment. What to do now? What now? So you ask them, plans for future actions. Why? Where the outcome can improve the situation. Where the outcome can improve the situation, and auditor has to check whether these plans are feasible. Again, I'll repeat. Auditor now has to do what? They have to see what plans the management has. After doing the assessment, what will you do now? Okay, yeah, our company is in trouble. What now? What actions are you planning to take? Will it improve the condition of the company? And whether the plans you're making, they are just, hawa mein plans, or they're actually going to work. Are they feasible? Okay. Then, okay. So now the management has made a very big elaborate plan. But is it financially possible to execute this? So next procedure is, if management has prepared a cash flow forecast. If management has prepared a cash flow forecast, the auditor has to analyze this. How does auditor analyze this? See whether the data used to generate this forecast is reliable. See whether the data is reliable and check whether assumptions used to make this forecast, assumptions underlying the forecast, are adequate. Okay. So what will I do? Okay, first I'll tell them, go make assessment. Second, okay, you have done the assessment. Now what are you planning to do? How will you correct the situation? What are your plans? Are your plans feasible? Okay, you have made the plans. How will you execute the plan? So cash flow forecast. So we will analyze the forecast, whether the data used to make this forecast is reliable and whether the assumptions are adequate. And then we can ask management if there is anything additional that you would like to know or you would like to tell me, additional facts since assessment. If anything new has happened, that also let's discuss so that we have a clear picture. And last audit procedure is get written representation from management regarding and if needed from TCWG. Everyone clear? So what does an auditor do after he has identified some events or conditions that cast a significant doubt on entity's ability to continue as going concern? What do? We ask the management to make assessment. What then? Yeah, they have made the assessment. What are your plans now? Is it feasible? Have you made a cash flow forecast? How will the money start coming in the company? Is the data used correct? Are the assumptions used correct? Is there any new additional information that has come to notice since the assessment? And to take written representation. Everyone clear? Everyone clear till now? Slowly, slowly, it should get in your head, okay? Solution, very simple. First, you have to mention the essay. Essay talks about auditor's responsibility relating to going concern and its implications for auditor's report. If events and conditions have been identified that cast significant doubt on entity's ability to continue as going concern, the auditor shall obtain sufficient appropriate audit evidence to determine whether a material uncertainty exists related to events or conditions that may cast significant doubt on entity's ability to continue as going concern by performing additional audit procedures. What are these audit procedures? If the management has not yet performed an assessment of entity's ability to continue as going concern, request them to make the assessment. Evaluating management's plan for future actions and whether these plans are likely to improve the situation and whether the plans are feasible. Where the company has prepared a cash flow forecast, and analysis of forecast is a significant factor in the future outcome in the evaluation of management's plans, then evaluate the reliability of underlying data generated to prepare the forecast and whether there is adequate support for the assumptions you have taken while preparing the forecast. Consider whether any additional facts or information have become available since the date management made its assessment, and requesting written representation from management and where appropriate TCWG regarding their plans for future actions and feasibility. Okay, we'll move on to question number 3. Question number 3, what does it say? The management of PQ Limited changed during the period under audit. Okay, change of management. Mr. Govind, an auditor at the time of receiving written representation on management responsibility from the management, was in a dilemma relating to date and period covered by the written representation. Further, new management was of the view that they can give written representation from the date they took over, not for the prior period when old management were handling affairs. Guide the auditor and management in this respect. Now, if you will observe, the first 2 questions were direct answers of some points that are directly from the essay. But this answer, of course, you have to identify the essay. Plus, you have to draft the solution. So here you have to use your own drafting skills. The answer is very simple. What is the answer? First, which is the essay? Kavisha has told essay 580. Correct. So this is essay number 580. So you have identified the essay. That work is done. Okay. You know, as per essay 580, an auditor can ask for the management to give in written representation that they understand their responsibilities regarding the financial statements. So that we can ask from them. That also we know. Now, the essay 580 clearly says that the management, even if you are a new management, you are obligated to give written representation for all the periods covered under audit. So if I am an auditor and there are prior period items in my financial statement, suppose I am auditor for 2024-25. There are some prior period items of 2023, 24 or 22, 23. So if there are prior period items in the financial statements, whatever is there in the financial statements, management has to give me the written representation. Management cannot say that I will give written representation only for the period for which I know. Once you become responsible for the company, you are taking over all the periods for which the things happen, and you're obligated to give auditor the written representation for all the periods. So answer is very simple. Then how do you draft it for 4 marks? Here, that is why the importance of this question is the drafting. The answer is very simple, but it is a one-line answer. So how do you make it a proper detailed answer? So this question is special because not because it is hard. The answer is very easy. The essay is very easy. But how do you draft the answer? So let's see. Essay 580, first you'll identify and mention that the date of written representation shall be as near and practicable, but not after the date of audit report. Okay. The written representation shall be for all financial statements and periods referred in the audit report. What does SA 580 clearly say? That written representation shall be for all financial statements and periods covered in an audit report. Furthermore, the auditor is concerned with events occurring up to the date of auditor's report that may require adjustment or disclosure in financial statements. The written representation should be dated as practicable, but not after the date of auditor's report. So now, what did I tell you? Ma'am, can you share this question material after the class? Okay, I'll let the Board of Studies know and we can do that, okay? So pay attention here. So events occurring up to the date of auditor's report, it may require adjustment to or disclosure in the financial statements. The written representations are dated as near and as practical, but not after. Now you are giving some general information about written representation. So you are writing in general about SA 580. The written representation are for all periods referred in auditor's report because management needs to reaffirm. This line is the most important, okay? This line is the most important. Management needs to reaffirm that written representations it previously made with respect to prior periods still remain appropriate. Situations may arise when now you are mentioning the current situation. Current situation as per case. Now we are mentioning current situation as per case. Situations may arise when current management were not present during the periods referred in audit report. Such persons may assert that they are not in a position to provide some or all of the written representations because they were not in place during the period. This fact does not diminish such persons' responsibilities for financial statement as a whole. Accordingly, the requirement for auditor to request from them written representation can cover the whole of relevant period still applies. In view of the above, management is required to provide the written representation. So here we come with conclusion. So here is conclusion that in view of the above, management is required to provide the written representation for all periods, even when current management were not present during all periods referred in auditor's report. Everyone clear? Can we move on to the next one? Everyone clear? Can we move on to the next one? So sometimes you may even start with the current situation. That's completely okay. You can even start with this and then mention SA 580. Is that clear? So that is not a problem if you start with the situation and then mention what happens in the standard. Okay. Let's move on to the next one. Question number 4. What is question number 4 about? Let's see. CA Ritu is conducting statutory audit of KLM. During the audit, she encountered significant difficulties in obtaining certain information from company's finance team. Okay. Sure. Now, what does significant difficulties mean? It means I'm asking something they're not giving. I'm asking something and they're giving very late. I'm asking for written representation, they're not giving. These are called as significant difficulties. Or whenever trying to find vouchers, they are all scattered, they are not put in proper numbers and in the file. Anything can be a significant difficulty. So during audit, she is finding a lot of significant difficulties when she is dealing with company's finance team. She also noted that one of the accounting practices, although acceptable under applicable financial reporting framework, may not be the most appropriate considering the company's circumstance. It means they are following some accounting policy, maybe regarding valuation of stock. They're following some accounting policy, though it is correct as per AS or it is correct as per company law. The CA Ritu is feeling that this is not correct as per the situation. As per the situation, she doesn't think that it is correct. So it becomes a matter of judgment. So here again, essay is already given. What significant findings from auditor should an auditor communicate to TCWG? So see, here what is happening? The management is not supporting you, right? You are finding problems with the management. So where will you go? You will go to TCWG. So you are finding difficulties during the audit. That's why you're going to TCWG. So here which essay will come? Essay number 260. Okay. Now what will you do? You have found some problem. Then as an auditor, let's give the answer. What does the answer say? Essay 260 tells that if as an auditor you have any significant findings, you can communicate to TCWG. What are those significant findings? This is a direct question, okay? This is a direct question. Here you don't have to draft on your own. Here it is directly from essay number 260. That is why I told you there are two types of questions that can come. One is a question which will look like a case study, but it is actually asking a direct question from the essay. And one type of question is where it is a case study and you have to draft the answer on your own. So there you have to write your own sentences and make connections and analyze the case law. So there, the previous question that we saw is that kind of question. But this question is directly from book, directly essay 260. So how does an auditor communicate? First, if you remember, there was something called as qualitative aspects. So as an auditor, what can I communicate to TCWG? If auditors has some auditor's view on qualitative aspects. What does qualitative aspects? Like accounting practices of the entity. Accounting practices of the entity. And if auditor thinks that they are not most appropriate, if I think as per the situation, the accounting policies and accounting practices you are using is not appropriate, I can go and talk to TCWG about it. What other thing can I go and talk to TCWG about? Any significant difficulties. Any significant difficulties also I can go and talk to TCWG about. Then I can also go and talk to TCWG about any significant matters, and I can even go and ask them directly for written representation. Okay. I can also discuss with them form and content, circumstances that affect form and content of what? Of audit report. So if I think I want to change the audit report format in some way, I want to add a few things, I want to reduce a few things, I can go and discuss that also with TCWG and any other matter. Any other significant matter, which I think in my judgment I can discuss. So as an auditor, what all can you discuss with TCWG? Communicate with TCWG as per SA 260. You can discuss all the qualitative aspects regarding accounting practices of a company, which in auditor's view is not most appropriate in the situation, even though they are in agreement with the applicable financial reporting framework. You can go and discuss significant difficulties with them. You can go and discuss significant matters. You can ask for written representations. You can also discuss the circumstances that can affect the form and content of audit report and any other significant matter. Okay, that's it. This is the answer. So we'll quickly see it. As per SA 260, communication with those charged with governance, significant findings from audit that you shall communicate, the auditor shall communicate is as follows. Auditor's view underline this: significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates, financial statement disclosures. Regarding all these things, I can give my opinion. Okay. When applicable, the auditor shall explain to TCWG why the auditor considers a significant accounting practice that is acceptable under AFRF not to be appropriate. So I have to mention the reason, give reason that why I think it is not appropriate. Okay, so you have to give reason. Then significant difficulties that you encountered. So here what difficulty we are encountering? Here we are encountering that they are not giving me certain information, company's finance team, so that I can go and complain to TCWG. Unless all TCWG are involved in managing significant matters that are arising that were discussed or subject to correspondence with management and written representations. Circumstances that affect form and content and any other significant matter. We are done. All right, everyone, we'll go to the next point. We'll go to the next question. Let's see. CA Sandeep has identified certain misstatements during the course of audit of an entity. Misstatements have been identified. Except 2 misstatements, all were corrected. So just write down here 2 uncorrected misstatements. Immediately your mind should think, why uncorrected? Management should tell why did they not correct? Do they think it is immaterial? Do I think it is material? Do I think the effect of this will be material on the financial statements? Your brain should start thinking like this. He wants to obtain written representation from management regarding the effect of these uncorrected misstatements, describe matter contained in such written representation. Also discuss documentation requirement regarding misstatements identified during the course of audit in accordance with the relevant essay. So the answer is quite simple. So if in this case, firstly you tell me which essay is applicable. Which essay is applicable? Everyone quickly tell me. Quickly. Be alert, be active. No, Kavisha, wrong answer. Which essay will be applicable? Essay 580 can be a secondary essay, which is the primary essay of this question, according to which we have to write the answer. Correct, Mujahid. Essay number 450. This question is for essay number 450. Very good, Mujahid. So, essay 450 firstly is our main point, okay? So what does it talk about? It talks about that as an auditor, I identify some misstatements. I can communicate that misstatements to management. They can correct a few. They may not correct a few. What do I do? Okay. So if the management is not correcting these 2, I will go to management, TCWG or management. Okay. I will go to them. If they believe that the effects of this uncorrected misstatement is immaterial. So I will get a written representation. I will ask them to give me in writing. So let's think of that you are standing in front of me. Kavisha, let's imagine that you are management, I am auditor. I go to you, Kavisha. I tell you that, Miss Kavisha, I have found 10 misstatements in your financial statements. You tell, okay, we'll correct these 8, leave these 2. I'll ask why do you leave these two? You are saying these two, though nothing important, it is very immaterial. So what will I tell? Miss Kavisha, please give me in writing that these two misstatements, even if they remain uncorrected, it will be okay, no problem, it is immaterial. Now do you understand the flow? Everyone understands the flow that I'm talking about? Think of yourself in reality, okay? So we will go to TCWG management. They have left two uncorrected misstatements. So I will ask them whether they believe that the effects of these uncorrected misstatement will be immaterial. This immaterial individually or in aggregate. Okay. So you have to see whether they have to give you in writing that whether they believe that the effect of this will be immaterial in individual or in aggregate. Okay. Plus, they have to attach a summary of such items in written representation. So if a lot of things have remained uncorrected, you have to give like a proper annexure. You have to give a list of it, of all the things that have remained uncorrected. So firstly, I can go to the management to give me this written representation. What is the second part of the question? Second part is saying, what do I document? This is talking about what do I document as per SA 450. So usually SA 450 requires you to document three main things. Pay attention regarding misstatements. Okay. First is amount below which it is trivial. What does it mean? It means I should have clearly written in my documentation that what do I consider trivial? Oh, if the amount of misstatement is less than 2000 rupees, it is immaterial. If the amount of misstatement in debtors is more than 10,000, it is material. So I should mention my threshold limits in documentation, that which limit or which level did I consider to be trivial. Trivial means immaterial, not important. So this should be clearly written in my documentation that which level I consider trivial. Then I should mention all misstatements that I found during audit, all misstatements that I found during audit and whether they are corrected. So usually an auditor prepares a list and mentions corrected, uncorrected, corrected, uncorrected. So like that we have to keep documentation. And you also have to mention auditor's conclusion whether uncorrected misstatements. So you have to give your analysis also whether uncorrected misstatement are material or not and why. Why did I reach this conclusion? You have to document this properly. So what all do we have to document about misstatements? First, what is the limit under which I will tell that misstatement is material or immaterial. Second, whether all the misstatements during audit, whether I have to list all the misstatements, whether they were corrected. And if there was some uncorrected misstatement, auditor has to give conclusion whether they were material or not. And whatever your conclusion was, why you gave that conclusion. So that's it. This is the answer. We'll quickly see. In the given case, that's why I told you, you can always start with the case study. So here also, if you remember, I told you that you can, current situation of the case, you can start with it always, okay? Whatever is given in this case study, you can start with that. In the given case, all except two misstatements have been corrected. The auditor shall request a written representation from management and where appropriate TCWG, whether they believe the effects of uncorrected misstatements are immaterial individually or in aggregate as a whole. A summary of such items should be included or attached to the written representation. What are the documentation requirements? Amount below which misstatements would be considered as clearly trivial. All misstatements accumulated during audit, whether they have been corrected. An auditor's conclusion as to whether uncorrected misstatements are material individually or in aggregate and basis for that conclusion. Everyone clear? We'll move on to the next question. Everyone clear? We'll move on to the next question. Okay. All right. CA Sumit has been appointed as statutory auditor of Core Limited. You are statutory auditor. List out some matters that you may consider in determining whether a deficiency or a combination of deficiencies in internal control constitutes a significant deficiency. First, let's understand what does it mean. Deficiency in internal control. Let me give you a small example of what does it mean. Okay. So suppose we are running a company, let's say a company like D-Mart, Reliance Mart, lot of small products are there, right? Where if you go to companies and if you go for shopping in D-Mart, Reliance Mart, all these big bazaar, there are very small items are there. A small tissue paper can be there, a small pencil case can be there, lot of things can be found, a small dabba can be there. So lot of small things are there and in large quantity. So suppose I find there that they do not do regular physical verification of inventory. Suppose I come to know that there is a deficiency in their internal control, that they do not do regular physical verification of inventory. What can happen if a company like D-Mart, Reliance Mart, they don't have proper control on their inventories? What all can happen? Just try to think what all can happen. If your regular physical verification of inventory does not happen, it can affect your valuation. It can affect pilferage. People can steal it. Yes or no? There can be some obsolete items, expired items that are still lying in the godown and we are not checking on it. That is why we are not coming to know. Okay. There can be any kind of discrepancy. There may be some frauds happening that we don't know about. These are all errors maybe, but there can be fraud in terms of inventory. Some people are taking away inventory and we don't know about it. So the question talks about that how do I decide that whether a deficiency, whether something that I have found is significant or not? Did everyone first understand the question? How do I, as an auditor, decide that if अगर मुझे internal control में कोई कमी मिली है, if I found some deficiency in internal control, how do I decide whether the deficiency is important or a big deficiency or it is an immaterial deficiency? That is the question. Everyone is clear? So how do we decide whether something is significant? So here, if you'll see, it's a long answer, but it is mostly talking about examples. Okay. See, these are all examples. So how does an auditor decide whether a deficiency is a significant deficiency? How do I take this decision that whether, yes, this answer is SA 265. It's not given in the answer, but you can mention it. If you mention it, it's completely okay. So how do I decide whether a deficiency is significant deficiency? So you tell me, okay, let's think of these points as very practically. If a deficiency can cause misstatement in financial statements, is it a significant deficiency? You tell me. If any deficiency can cause misstatements in financial statement, yes, it's a significant deficiency. If it can cause losses or frauds in assets and liabilities, is it a significant deficiency? What happened if we don't do this physical verification? Can it affect the financial statements? Yes. Can it lead to loss of asset? Yes. So is it a significant deficiency? Yes. So if it can lead to loss or fraud of asset or liability, it's a significant deficiency. If it is a very complex calculation like fair value accounting estimates, there it can cause significant deficiency. if the financial statement amounts are exposed to deficiencies. So if by not doing physical verification, is financial statement amount affected? Yes. Financial statement amount means closing stock. Is closing stock affected if we are not doing physical verification? Can it cause impact on closing stock if we are not doing physical verification? Yes. So is it affecting financial statement amounts? Yes. So that can be significant deficiency. The volume of activity that has occurred or could occur in account balance exposed to the deficiency. What is amount exposed? Amounts exposed, which means the financial statement amounts exposed to deficiencies. If we are not doing physical verification regularly, if there is deficiency, exposed means it becomes vulnerable, which means if physical verification is not done, it's a small internal control, right? But if it is not done, does closing stock is a financial statement amount? Does this get exposed? Does this get exposed to being wrong? Is it possible that our closing stock is incorrect because of this deficiency? That's it. This is called as financial statement amounts exposed to the deficiency. Is that clear? Okay. So the volume of activity that has occurred or could occur in the account balance or class of transaction exposed to the deficiency. So suppose my sales bill, imagine this, I'm giving you a very interesting example. Suppose I come to know that I have a software that prepares sales bill that does automated GST. Okay. So every time I make a bill, it makes automated GST, right? Suppose I come to know that the software in past 6 months have not been updated. Do you remember last month GST rates came down? Do you remember last month GST rates came down during Diwali? So you forgot to update your software. Now, this is a deficiency in internal control, yes or no? Is this a deficiency in internal control that you did not update your software on time? Now you tell me, because of not updating this, is a lot of volume of transaction affected? Because of not doing this, is a lot of volume of transaction affected, which means all sale bills went wrong. In all sale bills, the GST amount has gone wrong. So do you think not updating your software is a significant deficiency? Now tell me logically. Is not updating your software, accounting software, a significant deficiency? Why? Because it is affecting a large volume. So what is one of the way to know whether something is a significant deficiency? If there is large volume of activity that can occur in any balance or transactions that will be exposed to these deficiencies. So all sale bills got exposed to what? To the software not being updated. And hence all the sale bills became incorrect. So how do I decide whether something is a significant deficiency or not? When it can affect large volume of transactions. Okay. What else? How important is the controls? Okay, how important are the controls? If they're general controls, which means it can affect everything. If they're controls regarding prevention and detection of fraud, controls regarding accounting policies are always significant. Related parties are always significant. Transactions outside the normal course of business are significant. Controls regarding period and financial reporting process is always significant. So these are some generic points. The cause and frequency of exceptions detected as a result of deficiencies in control. Because there are continuous deficiencies, what is the job of internal control? What is the job of internal control? It identifies possibilities of where fraud or error can happen. What does it truly does? What does an internal control does? That before anything happens, we identify risk, right? Now, if you're continuously finding exceptions means every day a huge list of problems that have happened, the list is coming separately, and internal control is not able to prevent or detect. If internal control is not doing its job properly, then automatically it becomes a significant deficiency. And if one deficiency can cause problem in many other things, then it becomes a significant deficiency. So if deficiency in one can cause deficiency in many other things, so it can have multiple impact, then it is a significant deficiency. So you need not remember the whole thing. If you remember at least 5 to 6 points, that's good. So these are just list of examples. So what are the matters which can cause deficiency or common deficiency? What are the matters which helps an auditor to decide whether the deficiency is a significant deficiency? So if the deficiency can affect the financial statement and it can affect the financial statement amount, how can you remember? If it can affect the financial statement or it can affect the financial statement amounts, then it is a significant deficiency. If it can lead to loss or fraud in an asset and liability, it is a significant deficiency. If it is related to any subjective and complex things like accounting estimates, it can be significant deficiency. If it can affect a lot of volume of activity, then it is a significant deficiency. If it is regarding some important controls like related parties, accounting policies, then it can be a significant deficiency. If there are a lot of exceptions every day as a result of deficiency, then it is a significant deficiency. And if one deficiency can affect other deficiencies, then it is a significant deficiency. Everyone is clear with the answer? We'll move on to the next one. Okay. During the audit of Christ Limited for the financial year ended 31st March 2025, the auditor CAZ was in the process of finalizing the report on 30th May 2025. The engagement partner emphasized that CAZ should perform audit procedure designed to obtain sufficient appropriate audit evidence that all the events occurring between the date of financial statements and the date of audit report that require adjustment or disclosure have been identified. What audit procedures as per SA 560 should the CAZ perform based on risk assessment to identify events occurring between the date of financial statements and date of audit report? Here also they have given you the essay, okay? So here you don't have to identify the essay, they have given. This is again a direct question. Direct answer from SA 560. It is a very straightforward answer. So see, initially you have to take normal things, but basically as an auditor, you have to perform four main procedures, okay? Four main things. First, you have to see, is it my job or management's job to identify all the events? Whose job it is to identify all the events? So I will check, should I start identifying the events or should I check whether management has done their job? Should I start doing, should I myself start identifying events? Or as an auditor, the first thing is I should first see if management has done their job. So think logically. So what is the audit procedure auditor will do? We will obtain an understanding. We will obtain an understanding that what are the procedures that management has established. What are the procedures that management has established so that all subsequent events are identified? Okay. First, I'll see what has the management done, what procedures they have established. Whether, then I'll ask management and TCWG whether there were any subsequent events this year. Okay. So first I'll check whether they have a process. Next, I ask them, give me a list of what you have found. Okay. Then they have given, let's say, Mujahid is the management. He has given me a list. Okay. Mujahid has given me 5 events that has happened. Now I need to check whether this list is correct. So I'll do corroborative procedures. So what I can do, I can read minutes. Why? I can read the meetings when you have discussed these problems that have happened. So reading the minutes that have held after the date of financial statements, of the meetings that have happened after the financial statements, and I can read interim financial statements. So I can do four things. If I want to understand subsequent events, I can first ask the management, what are your procedures to find events, and whether you have found anything, give me the list. Inquiring them to give me the list of whether they have found any subsequent events. Okay, they have given me the list. Now I have to see whether that list is reliable. So I can read the minutes, and from the meetings I can know whether these events are matching or not, and I can read the interim financial statements whether these effects are given or not. Everyone clear? That's it. This is the answer. Okay. So audit procedures occurring between the date of the financial statements and the date of auditor's report, the auditor shall perform audit procedures designed to obtain sufficient appropriate audit evidence that all events occurring between the date of financial statements and date of audit reports that require adjustment or disclosure have been identified. The auditor is not expected to perform additional audit procedures to matters which previously applied audit procedures have applied satisfactory conclusions. The auditor shall perform the audit procedures above so that they can cover the period from the date of financial statement to audit report. Again, it is repeated. This is the main point, okay? The auditor shall take into account the auditor's risk assessment in determining the nature and extent of such audit procedures. Obtain an understanding of the procedures that management has established to ensure subsequent events are identified. Inquiring from management and where appropriate TCWG whether any financial statements have occurred. Reading minutes if any of the meetings with owners, management, TCWG that have been held after the financial statements and inquiring about the matters, and reading the entity's latest subsequent interim financial statement. That's it. We are done with this question. Now let's come here. On reviewing the internal controls over inventory as part of statutory audit of a company, the auditor finds that physical verification is not being conducted at regular intervals as stipulated by the management. The auditor finds it to be a significant deficiency in internal control. So you have found a significant deficiency. See, I gave this example recently. He points it out to the management in one line. Physical verification of inventory is not being conducted at regular intervals. Is this communication proper? Ignore reporting requirements. So it's not talking about how to report. It's talking about whether the way you told the management, whether that is correct or not. So this I'll just quickly tell you. So if you have found any significant deficiency and you want to tell to TCWG or you want to tell management, you have to tell what the deficiency is, then what are the effects of it. You always have to tell what are the effects of it, okay? How does it affect, okay? And how to correct it. What can be done. So you cannot just write what is the deficiency. You also have to mention what are the effects of the deficiency, how this deficiency can affect, and how it can be corrected or what can be done. Just remember this in short, okay? Then the answer will become very easy. As per essay 265, so this question is regarding significant deficiency, right? You're communicating significant deficiency. So of course it is essay number 265. So, communicating deficiencies in internal control to those charged with governance and management. What does it say? That while pointing out deficiencies in internal control, the auditor has to not only communicate the deficiencies, giving their description, but also explain the effects and give sufficient information to TCWG to understand it. You cannot just write in one line that physical verification not done. In the given situation, auditor noticed, so again you're mentioning the case. Auditor noticed significant deficiency, so this you just write from the case, okay? And he pointed out the same to management regarding physical verification of inventories not being conducted. Therefore, the above communication is not proper. So here you are giving your conclusion. Not only significant deficiency has to be communicated, it should be explained the potential effects of not carrying out physical verification at regular intervals as stipulated. It should explain that such a deficiency can lead to misstatements of inventories impacting the profit. So this you have to draft. Okay, this you have to draft on your own, that if I don't do physical verification, what can happen? So impacting profits, highlighting the importance of such control, it should be stated that the responsibility should be fixed by correct person for everything. So what can they do? They should fix the responsibility that you are responsible for doing this job. That's it. We are done with question number 8. Let's come to question number 9. Give 5 examples of operating conditions that can affect significant doubt on entity's ability to for going concern. Which essay is this? Quickly tell me. Which essay is this? Which essay is this? Entity's ability to continue as going concern, essay 570. Do you remember there were 3 kind of conditions? Financial conditions, financial indications, operating indications, and others. Do you remember? So there are 3 indications that can affect and that can give us sort of that can create a doubt on entity's ability to continue as going concern. So financial indications, if you remember, they were like cash losses in the company, negative ratios, inability to pay dividend. Those were financial. But what are they asking you? Operating conditions. Now, if you remember operating conditions, they were that you lost a key supplier, or you lost a management, you lost some customer, or you have labor difficulties, the labor is going on strike, labor is not happy with you. Those are called as operating conditions. So this you can write very easily in the exam. So as per 570 going concern, following are examples: management's intention to liquidate the entity, loss of key management without replacement, loss of a major market, key customer, franchisee, license, supplier, labor difficulty, shortage of supply, emergence of a highly successful competitor. All these points are called as operating events or conditions. This is a very simple answer. Let's come to question number 10, everyone. Let's come to question number 10. GEM has appointed GSP and Company as its statutory auditors. While conducting its audit, the audit partner requested the management to provide a written representation that it has fulfilled its responsibility for preparing of financial statements as per AFRF. The manager is of view that since all records and evidence have already been given, a separate written representation is not required. So this is a question of essay number 580. Now you tell me, even if we have found all the evidence, can we still ask management to write and give it? Even if we have done all the work, can we still ask management, आप मुझे लिख कर दो, give me in writing? Okay. So is the stand of management correct here? So here you have to draft. See, it's a simple answer, na? Management is wrong. Management has to give the written representation if it is required by the auditor. You have to mention what is essay 580 about. And that is why you have to develop the answer. It's not a point-wise answer. So here we have to draft the answer. What is given? Again, as usual, you can start with the case. You can start with the case. In the given case, GSP and Company requested the management to provide written representation that it has fulfilled. This is all copy-paste from the question. Okay. The management is of the view that since all records have already been given a separate representation, this full, you can copy paste. See, this is fully from the case study. Okay. View of the manager is not correct because written representations about management responsibility are necessary. Audit evidence obtained during the audit that management has fulfilled its responsibility about financial statement and about information is not sufficient. Audit evidence is not sufficient without obtaining confirmation from management that it believes that it has fulfilled the responsibilities. This is because auditor is not able to judge only on the audit evidence whether management has presented and prepared all the financial statements correctly. For examples, auditor could not conclude that management has provided auditor with all information agreed in terms of audit engagement without asking it whether and receiving confirmation that such information has been provided. The written representation requiring fulfillment of management responsibility in relation to above on agreed acknowledgement and understanding of management of its responsibility by requesting confirmation as it has fulfilled them. So here it is a very complicated sentence. Basically, you have to obtain in writing an understanding from management that it believes that it has fulfilled their responsibilities. So if you remember this, you can construct the sentence. Just remember this small thing I told. You have to obtain in writing an understanding from management that it believes that it has fulfilled their responsibilities. Just remember this sentence, okay? You will be able to write. So this is particularly useful when those who sign the terms of engagement are no longer relevant. The terms of audit engagement were prepared in previous year. There is an indication that management misunderstands and there are some change in circumstances. So especially when these four things have happened, what has happened? That when the people who signed are no longer there. So please give me the terms of engagement we signed last year. This is new year. So give me a new written representation. Or if I feel that management has a misunderstanding, I face some problems with them, you sign again and give me. And if there are some change in some situations and circumstances, please sign again and give me, okay? Next. What do you mean by deficiency in internal control and significant deficiency? This answer is quite simple. There's nothing much in this. As per SA 265, deficiency, just remember, internal controls deficiency means that a control is designed, implemented, operated, but it is not able to prevent, detect, and correct misstatement. Okay? Internal control है, internal control बनाया है, अप्लाई किया है, चल भी रहा है, but वो अपना काम नहीं कर पा रहा है तो it is there, but it is unable to prevent, detect, and correct. And second set deficiency is है ही नहीं. That is internal control is missing. First type of deficiency is system तो है, but वो अपना काम नहीं कर पा रहा. दूसरा deficiency is that system है ही नहीं, control है ही नहीं. So there are two types of deficiency. Control is not there. Control is there, but it is unable to prevent or detect. That is called as deficiency in internal control. What is significant deficiency? It is a deficiency or combination of deficiencies that in auditor's professional judgment is so important that you need attention of those charged with governance. So significant deficiency हम उसको बोलते हैं जो या तो खुद या मिलकर इतनी इंपॉर्टेंट है कि उसके बारे में अब TCWG से बात करनी पड़ेगी. It is so important that now I have to go and bring the attention of TCWG. So if it is important enough to talk to TCWG, it is a significant deficiency. So significant deficiency, this is next paragraph is very important even for MCQ. Just pay attention. Significant deficiency depends not only on whether a misstatement has occurred, but likelihood that a misstatement could occur and the magnitude of a misstatement. So deficiency does not mean some misstatement has happened, but a misstatement may happen, can happen. आप ये नहीं करोगे तो ये हो सकता है. So deficiency we don't find only when we find misstatement. You can even find it even if there is no misstatement. Okay. Next, during the audit of a company, CA Jack obtained written representation from management regarding all known instances of non-compliance with laws and regulations. However, during the audit, he observed that information provided in this regard was incomplete and audit evidence indicating such non-compliance contradicted. See, now this is a very interesting, this is again drafting, okay? You have to draft. What does it mean? I asked, suppose Kavisha is the management. I asked Kavisha, give me a written representation that anything regarding laws and regulations, if you have not complied, you know, and you are letting me know that these are the instances in which we have not complied. So you gave me a list. But when I was actually auditing, I came to know you hid something from me. The list you gave is not complete. It means I have found some evidence that is contradicting the written representation that Kavisha gave me. Now you tell me logically, Abhishek, can it affect my trust on Kavisha? Can it affect my trust on Kavisha now? Can it affect my trust on the management? Whether they are proper, whether they are reliable, whether they are honest, it will affect. Yes. Can it also affect my trust on the other representations that Kavisha gave me for other matters? Can it also affect my trust and reliability on other evidences that Kavisha gave me? Other written representations? It might. Very good. So this is the crux of the question. Now, how do we write this? Okay. Again, you start with the case. Okay. In the given situation, company's management has not provided complete information regarding non-compliance. If the auditor has concerns about, remember these words, competence, integrity, and ethical values of management, or about commitment of enforcement of these, the auditor shall determine the effect of such concerns on the reliability of representations and audit evidence in general. So now I am not just doubting the written representation about non-compliance that Kavisha gave me. I am overall doubting that whether this management and anything they do is reliable or not. The above situation highlights that auditor has obtained written audit evidence regarding non-compliance with laws which is inconsistent with written representation, casting a doubt about reliability of written representation. As per SA 580, if written representations are inconsistent with other audit evidence, the auditor shall perform audit procedures to attempt to resolve the matter. What can I do? I can try to resolve. I can talk to you. Kavisha, I found some problem. Why did it happen? Let's try to find. If after finding I came to know, okay, Kavisha made an honest mistake, it was not, it can happen. So I have to first do that procedure. So I have to go to Kavisha and tell that, hey, Kavisha, you gave me this list, but this is my evidence. It is contradicting. So let's try to resolve the matter. If the matter still remains unresolved, the auditor shall reconsider the assessment of competence, integrity, and ethics and diligence of management and shall determine the effects that it can have on representation and audit evidence. If the auditor concludes that written representations are not reliable, the auditor can take appropriate actions, which means it can also have an effect on your audit opinion as per SA 705, modifications to the opinion. Is that clear? Okay. Okay, here we will take a 5 minutes break. Okay, technical team, we'll take a 5 minutes break here and then we'll continue with chapter number 8 questions. Okay. Everyone got a good overview of chapter number 7? We have covered all the essays. Okay. So technical team, we are going on a 5-minute break. All right. All right, everyone, we are back. Are you guys back? Quickly send a yes if you're back. Madhu, Abhishek, Om, Mujahid, Aradhana, Kavisha, Kavya. Send a yes if you are available. All right. Okay. Others, quickly tell me. Aradhana has also said yes. Mujahid has said yes. Kavisha, what about others? Are you back? Okay. All right. Now we'll start with the next chapter revision, that is audit report. In this chapter, the majority thing that we have to see is essay number 700, 701, 705, 706, 710. Okay. These are the major things. And of course, you have to see Karo. So these are the things that we have to pay attention in this chapter. 700 is about forming an opinion and reporting. So it's about major audit report. 701 is about key audit matters. 705 is regarding modifications to opinion. Modifications to opinion. 706 is emphasis of matter paragraph, other matters paragraph. Here this is about comparative financial information, and next is Karo, of course. So we will be going through this structure, and I have included a lot of different questions here. So hopefully you will get an overview of the whole chapter. All right. So let's come to the first question. The auditor's report shall include a section with the heading Responsibilities of Management for the Financial Statement. Essay 200 explains the premise relating to responsibilities of management and, where appropriate, those charged with governance, on which an audit in accordance with essay is conducted. Explain. So, audit report as per essay number 700. Okay. As per essay number 700, it is possible that it will include a heading. So there is like title, there is addressee, there is a opinion paragraph, basis for opinion paragraph, key audit matters, going concern. All these paragraphs are there. In that, one of the paragraph is responsibilities of the management. So basically, what does management take responsibility for? Okay. It takes responsibility for preparation of financial statements. It also takes responsibility for internal control. It takes responsibility of internal control, that they have kept internal control whatever is necessary. Okay. So auditor has to, when they are making audit report, give a reference regarding this part, that they are taking responsibility. They also take responsibility regarding going concern, entity's ability to continue as going concern. For this also, the responsibility is taken by the management. Okay. So here, those things only you have to write as it is. So let's see. Responsibilities of financial statement. The auditor's report shall include a section with a proper heading, responsibilities of management. So essay 200 explains the premise relating to responsibilities of management and, where appropriate, those charged with governance. So this sentence is from your question only. Management and, where appropriate, those charged with governance accept responsibility for preparation of financial statement. That's why I told you, remember these 3 points. Management take responsibility for these 3 things. Preparation of financial statements, internal control taken is as necessary, and going concern, ability of the concern. Okay. Management also accepts responsibility for such internal control as it determines is necessary for preparation of financial statements that are free from material misstatement, whether due to fraud and error. The description of management's responsibility in the auditor's report includes reference to both responsibilities as it helps to explain users the premise on which audit is conducted. So this is generic. The section of the auditor's report shall describe management's responsibility for first, preparing the financial statement in accordance with applicable financial reporting framework. So their first responsibility is that the financial statement should be made as per AFRF. And such internal control is made that is necessary to enable preparation of financial statements that are free from material misstatement due to fraud and error because of the possible effects of fraud. So this is the generic point you can mention. So main point is this: preparation of financial statements and internal control. Next is assessing the entity's ability to continue as going concern and whether the use of going concern assumption basis of accounting is appropriate, as well as disclosing matters relating to going concern. The explanation of management's responsibility for this assessment shall include a description of when the use of going concern is appropriate. So here are the three things. So just remember these three things. You'll be able to write the answer. What are the responsibilities that auditor has to mention in audit report? Preparation of financial statement as per AFRF, applicable financial reporting framework. Internal control is as necessary to prevent and detect the fraud and errors and keep the financial statement free from material misstatement, and entity's ability to continue as going concern. So that's it. We are done with the first answer. Next, come to second question. SKN, a biopharma company and global manufacturers of select critical care medical products, has been sanctioned working capital limit of rupees 5.99 crore from a nationalized bank on the basis of security of current assets. Current assets here means debtors, stock. Okay. During the year under audit, the statutory auditor of SKN considers that inventory is very material to financial statements and performs audit procedures over companies' final inventory records to determine whether they accurately reflect actual inventory count and without any major discrepancies. What are the reporting requirements as per CARO? So remember this, okay? So first 3 points you remember of CARO. The first is PPE, second is inventory, and third is loans. Okay, just remember this PIL. PIL, you remember the first 3 clauses you should remember. Okay, PPE, inventory, and loans. So this is regarding inventory. So regarding inventory, we have 2 main things to see in CARO. Okay. What does CARO says? Company's auditor report order. These are the extra things that government is telling that you are auditor of a company. Please comment on these extra things. So second thing that we have to comment is inventory. What we have to comment? We have to comment whether physical verification of inventory, is conducted at regular, reasonable intervals. Okay. By whom I have to do that? I have to do the physical verification of inventory at regular intervals. Do I have to do that verification? Quickly tell me. No. Management. Okay. So whether management is regularly at reasonable intervals doing physical verification. Okay. And if yes, whether the procedure and coverage is appropriate. So I have to decide, okay, management is saying, yeah, we are doing regular verification. Then I have to see whether they're just doing or they're actually doing correctly. So I have to see whether the procedure and coverage is appropriate. Then I have to see if they found any discrepancy. What is discrepancy? Between actual inventory and inventory in books. So if the inventory in books is saying that there is 2 crore of inventory and as per actual verification 2 crore 10 lakh. So if there is discrepancy and if it is 10% or more, if the discrepancy is 10% or more in each class of inventory. What does it mean by class of inventory? Inventory can be in different class like raw material, WIP, finished goods. So if in each class of inventory there is 10% discrepancy, auditor has to see whether it is properly dealt with, whether proper treatment is given or not. So what is the first thing auditor has to comment about inventory? Auditor has to check whether inventory physical verification is correctly done at reasonable intervals. If yes, whether the procedure and coverage is appropriate. Yes, if there were discrepancies found of 10% or more on each class of inventory, whether it has been properly dealt with. So this is the first point regarding inventory. What else do we check in inventory? We check that if at any point during the year, working capital given to the company is more than 5 crores. In this case, how much it is? It is 6 crores. So if the working capital given by any bank or financial institution to our company is more than 5 crore, then bank asks you to submit stock statement to them quarterly. Okay. So whether the quarterly statement that we submitted to bank, the quarterly statement or returns that we submitted to bank is in agreement with books of accounts. Okay. So if we have submitted the quarterly stock statement to bank, whether they are in agreement with books of accounts. So that's it. This is your answer. So you have to write the clauses of CARO. So the question is simple, that what are the reporting requirements regarding physical verification in CARO? So as per clause 2, what does it say? That whether physical verification of inventory is conducted at reasonable intervals, whether the coverage and procedure of such verification is appropriate, whether discrepancy of 10% or more in aggregate of each class of inventory were noticed, and if yes, how were they dealt with? Whether at any point during the year, company has been sanctioned working capital in excess of 5 crores from banking or financial institution, whether quarterly returns filed by company with banks is in agreement with books of accounts of the company. If not, give details. Can I move on to next now? Everyone clear? Can I move on to next now? Everyone is clear? Okay. Question number 3. Again, I have taken CARO. So CARO 2020 shall apply to every company, including foreign company. However, it specifically exempts certain class of companies. State which classes of companies are specifically exempt. This is again a direct question. This is completely a direct question regarding applicability. Okay. This is completely a direct question. So if you'll remember, it was insurance company, banking company, Section 8 company, small company, one person company, and private company with some conditions. Okay, we'll go through that point. So you have to write it as it is. CARO shall apply to every company, including a foreign company, as defined in section clause 42 of section 2, except a banking company as per Banking Regulation Act 1949, an insurance company as per Insurance Act 1938, section 8 of Companies Act, one person company, small company, and this is very important, a private limited company not being a subsidiary or holding. So I'll just write this for you. Okay, so how to write this? You have to write like this, that if you are a private company, then you should not be subsidiary or holding of a public company. So like this, you should not be a subsidiary or holding of a private company with following conditions. What is the condition? Paid up share capital plus reserves and surplus should not be more than 1 crore rupees as on balance sheet date. Then any kind of outstanding borrowings should not be more than 1 crore at any time during the year. Means even for one day, it should not be more than 1 crore. And these borrowings we have to take only from banks and financial institutions, not third party borrowings. Those are not covered. And if there is total revenue not exceeding 10 crores during the year. So if all these conditions are satisfied, then a private company need not make CAROs. So what is the condition for a private company? A private company not being a subsidiary or holding of a public company, then paid up share capital and reserve and surplus should not exceed 1 crore as on balance sheet date. Outstanding borrowing from banks and financial institution should not exceed 1 crore at any time during the year. And total revenue should not exceed 10 crores during the year. Okay. So here this answer is done. Please remember, very, very important question. Okay. And easily you can get marks also. You will not lose any marks because it's a direct question. See, whenever it's a direct question, you can write as it is from the book. Only when there is drafting related question, you have to use your own mind and understanding a little bit. There it is possible that you might lose 1 or 2 marks, but most of the questions, 70 to 80% are direct questions. So there you can gain full marks if you have studied properly. Okay. Let's come to this. Oh yes, one essay I forgot to mention here on top was essay 299, joint audit. Okay. Joint audit is also there. Let's come here. ASG Limited's business has grown from one state of India to various countries of the world. Since the business has increased multifold, the management decided to appoint joint auditors for conducting the statutory audit of the company. They appointed 3 CA firms for it. For which work the joint auditors will be severally and jointly responsible. You tell me, is this a drafting question or a direct question? Is this a direct question from the book or a drafting question? Do you have to write on your own or the answer is direct? So it's a direct question. Okay. It's a direct question. Okay. Which essay? Essay number 299. So when are the auditors jointly and severally responsible? This is a very, very important and very frequently asked question in exam. Okay. When the audit work is not divided, simple. Whatever we have not divided, so there are 3 auditors, whatever we have not divided amongst ourselves, we are all responsible. Decisions regarding planning of common areas. So these are both common areas, okay? So whatever work we have not divided, we are all responsible. Whatever are the common audit areas, the planning for that, we are all responsible. Then matters which were brought to the notice of joint auditor by one of them, and there is an agreement. What does it mean? So suppose there are auditors A, B, and C. Okay. A is checking, let's say, revenue. B is checking expenses. And C is checking balance sheet items. Okay. Now, each one have divided the work. Now, while A is checking revenue, she comes to know something about closing stock, which is whose area of work? C. So A cannot say, ये तो C का काम है, मैं क्यों बोलूं? No. If while doing the work, you come to know or you come to notice something that is other joint auditors area of work, you should bring it to the attention. And if all agrees that yes, there is some problem in closing stock, now all of you have become responsible for the closing stock. Is it clear? So if there is something that is brought to the attention and everyone is agreeing to it, then everyone becomes jointly and severally responsible. Okay. So if matter has been brought to the notice of joint auditors by any one of them and there is agreement on such matter, then everyone becomes responsible. Then financial statement has been made as per the relevant statute. So all the financial statement we have to examine as per AS, we have to examine as per SA, that overall everyone is responsible. Then presentation and disclosure of financial statement as per AAFRF. You know about Companies Act, right? You have to follow Schedule 3. Yes or no? You have to make balance sheet in P&L as per Schedule 3. So can you give that responsibility to any one auditor or everyone has to see that the balance sheet and P&L is made as per Schedule 3, right? You cannot give it to A that you have to see that whether balance sheet is as per Schedule 3, no. So presentation and disclosure as per the AFRF of the financial statement is everyone's responsibility. Then audit report. Whether the audit report is made as per SA 700, as per section 143 of Companies Act, everyone is responsible for it. Okay. So please remember, very, very important answer. What matters are everyone jointly and severally responsible, areas of work not divided, planning and decisions taken regarding the planning of common audit areas, matters which have been brought to the notice by one of them and there is an agreement, examining the financial statements as per the requirements of relevant statutes, everyone is responsible. Presentation and disclosure of financial statements as per AFRF, everyone is responsible. And lastly, audit report is as per the statutes, everyone is responsible. Okay, that's it. We are done. Next question. When the auditor modifies the audit opinion, the auditor shall use the heading qualified opinion, adverse opinion, disclaimer of opinion. Explain when the auditor should express the following. This is which essay number? Essay number 705. Okay. I'll quickly tell you, please remember this properly and nicely. If it is a qualified opinion, when is qualified opinion given? When you obtain sufficient appropriate audit evidence that misstatement exists and misstatement is material but not pervasive. Okay. So when do we give qualified? We have obtained evidence that there is some misstatement and that misstatement is material but it is not pervasive. Then we give qualified. And we also give qualified when we are unable to obtain sufficient appropriate audit evidence and uncertainty of misstatement exists, which is material but not pervasive, which is material but not pervasive. So remember, when do we give qualified? When do we give qualified? Sufficient appropriate evidence is there. It is material but not pervasive. Sufficient appropriate audit evidence is not there and uncertainty is material but not pervasive. Okay. Next situation, when do we give adverse? When you have obtained sufficient appropriate audit evidence that a misstatement is existing, that the misstatement exists and it is material and pervasive. Okay. So when do we give adverse? You have found a misstatement, you have found the evidence and it is material and pervasive. When do we give disclaimer? Disclaimer of opinion. We are unable to obtain sufficient appropriate audit evidence and uncertainty exists. Uncertainty exists and it is material and pervasive. Is everyone clear? Everyone clear in quick way? Okay. So that is it. This is the answer. So this is the solution. When do we give qualified opinion? Here you can mention as a 705, modifications to the opinion and independent auditor's report. When do we give qualified opinion? You obtain sufficient appropriate audit evidence and misstatement is material but not pervasive. Unable to obtain sufficient appropriate audit evidence, auditor concludes that effects may be material but not pervasive. Adverse opinion, when do we give? You have obtained sufficient appropriate audit evidence that misstatement is material and pervasive. When do we give disclaimer? When you are unable to obtain sufficient appropriate audit evidence and you conclude that the effects may be material and pervasive. Very easy answer. You can get full 4 out of 4, 5 out of 5. Okay. Next again is a Karo question. During the audit of a limited company as a statutory auditor, you discovered that a fraud of rupees 5 lakh has been committed by the company. What are the reporting requirements of fraud under Karo? So with respect to fraud, you have to follow these 3 things, remember. Okay. Fraud, 11 पे खतरा. Okay, 11 पे खतरा. So 11 is fraud. Clause 11 is fraud. Okay. So 12 पे खतरा की जगह 11 पे खतरा. Okay. 11 danger. 11 danger. Okay. So when do we do this? There is also another way. 9 to 11 हो गया means someone ran away with money. 9 to 11 we say in Hindi. So 9 to 11 हो गया means ran away with the money. So fraud is 11. Okay. So fraud related three main points. If any fraud, which means any amount, even small amount, if any fraud has happened by the company or on the company, it has been noticed and reported during the current year, then mention the name and amount to be involved. Kis type ka fraud hai, what type of fraud it is, what is the amount involved, you have to mention. Then if any report under section 143.12, if you remember that 1 crore, do you remember? Section 143.12 says that if you have found a fraud that is 1 crore, individual fraud of more than 1 crore, then you have to report directly to central government. So here you have to mention whether you have made any report under section 143.12 in form ADT 4 to central government. And whether auditor has considered whistleblower complaints, if any, received during the year. Do you know who are whistleblowers? Anonymous complaints. Okay. So if during the year company has received any anonymous complaints and tips, you can mention it that whether auditor has taken into consideration those things. So regarding fraud, Caro has three things. If you have found any fraud during the year, any amount, any no limit. If you have found any fraud that has been noticed or reported during the year, mention the nature and amount. Second, mention whether you have done any reporting under section 143 subsection 12 read with rule 13 of companies audit and auditors rule 2014. And third, whether auditor has considered whistleblower complaints that they received during the year by the company. That's it. Next, come to question number 7. Pure Services Limited is into litigation relating to some legal action initiated by the industrial regulator. The matter has reached jurisdictional high court. Keeping in view uncertainty relating to future outcome, the statutory auditor of the company has included emphasis of matter paragraph in auditor's report. Briefly discuss the considerations to be taken care by statutory auditor when EOM paragraph is included. Give 2 examples of circumstances when to include EOM paragraph. Just remember, EOM paragraph is for information already appropriately disclosed in financial statements. So EOM paragraph cannot have anything new. EOM paragraph means you are highlighting something that is already there. So usually companies' financial statements can be very big and bulky. There can be hundreds of pages. And I, as the investor, can miss on something. So that you don't miss it, the auditor wants to highlight something that the management has already disclosed correctly. So EOM paragraph, when you make, it cannot have any new thing. It should have things that were already correctly available, already correctly disclosed. Okay. So that can be a litigation matter. That can be some catastrophe. Catastrophe means some calamity that has happened, some flood has happened, fire has happened. All that things you can mention in the EOM paragraph that is already correctly disclosed. Whenever you are making EOM paragraph, there should be a clear heading. There should be a clear heading, and it is not a substitute for 705. It is not a substitute for modifications that you need to do. It's not a substitute for opinion that you need to give. Okay. So this is the generic information about EOM. So let's see. When the auditor includes an EOM paragraph, the auditor shall first include a paragraph with separate section with proper heading that it is an emphasis of matter paragraph. You have to clearly mention that it is emphasis paragraph. Then you should give a clear reference to matter being emphasized and where you can find disclosure fully described in the financial statement. What does it mean? I can mention that a fire occurred in the company on 31st uh, January 2025. Full disclosure available under note 3 page XYZ of financial statements. So you have to give reference also that I am just mentioning here. If you want to study in detail, you can go to this page number. That is called as clear reference. You have to give a clear reference on the matter being emphasized and where the full disclosures can be found. Indicate that auditor's opinion is not modified. Just because I'm giving an emphasis of paragraph, it does not mean that my opinion is modified. So state that clearly. Then these are examples. You just have to, in question, there is only two, but I've given you extra just so you have an option. So EOM paragraph can be regarding uncertainty of any litigation or action against you, any subsequent event that occurs between date of financial statement and date of auditor's report, any early application of a new accounting standard, any catastrophe. Catastrophe means any kind of calamity that has or continues to have an effect on company's position. We are done. Okay. So which essay was this, students? Which essay was this? 706. Ma'am, please explain other matters. Oh, you want to? I'll just give a quick view. Other matters. Other matters means matters that are not disclosed in financial statements, but auditor wants to include regarding audit report, auditor responsibility, to increase communication value. What does it mean? So see, the key difference between an EOM and OM is that EOM is for matters that are already disclosed in the financial statements. But other matters is for new and extra information. But that information can only be regarding audit report or auditor's responsibility or auditor. Example. Let's say, Abhishek, that the previous year figures are unaudited. Previous year figures are unaudited. You want to write and tell, I am the reader of the financial statement. You are the auditor. You want to let me know that the previous year figures were unaudited. Where will you write it? Quickly tell me. Where will you write this information that you want to give to me about audit report? OM. Simple. Again, one more example. Suppose, Abhishek, you are the current auditor, but Kavisha was previous auditor. And Kavisha gave a qualified report last year. So you want to mention it somewhere that previous year audit report was qualified. Where will you mention it? Where will you mention that previous year audit report was qualified? OM. Now you understood, Abhishek? This is just a quick overview. You understood what is OM? So wherever an auditor wants to communicate something about audit report, auditor responsibility, about auditor, that is, then he uses OM paragraph. Do you remember in joint audit that if out of three auditors, there are three auditors, two say that we will give unqualified opinion and one is saying I will give qualified opinion. Do you know if one report will be prepared or two reports will be prepared? If there is a disagreement between joint auditors, one report will be prepared or two report will be prepared? Quickly tell me. Everyone? No. two reports will be prepared. SA 299 says that majority rule is not followed. Okay, majority wins is not applicable. If two people are saying unqualified, they will make unqualified report. If one person is saying qualified, then they will make qualified. So company will have two audit reports. But each of them have to mention about each report in other reports, which means suppose A and B gave unqualified report, but they will mention in other matter paragraph that the report of C is qualified. And C will give a qualified report, but he will mention in other matters paragraph that A and B have given unqualified report. Do you understand? So this other matters paragraph is used by auditors regarding audit reports, audit responsibilities and themselves. Is that clear? All right. So this part is finished. Now let's come to next question. Section 143 subsection 1 of Companies Act states that every auditor of a company shall have access to books of accounts and vouchers of the company and shall be entitled to require from officers such information and explanation as necessary and inquire into certain matters. Now this is a section which is very, very specific. You have to give a very specific answer. You cannot give a generic answer. Okay. If you don't remember the section number, this is the student's mistake here, that they don't remember the section number. If you remember the section number, this answer is very easy. So section 143 subsection 1 is about inquiry into certain matters. What inquiry you have to do? That if the company has given any loans and advances, where the terms and conditions are prejudicial to the interest of the company and its members. Do you remember these points? If the transactions are merely represented by book entries, whether they are prejudicial. Do you remember this answer? This is the answer you have to write. So section 143 subsection 1 talks about inquiry on certain matters. What are those matters? First, an auditor has to inquire that if the company has given any kind of loans, any kind of advances on security, whether the terms and conditions of those loans and advances are prejudicial. What does it mean? So suppose I am running a company and I have given a loan to Madhu. Madhu, I have given a loan of 10 lakh rupees and I have told Madhu, hey, whenever you want to give, you give me back. Is that a correct way of giving loan? Whenever you have money, you give me back, Madhu, no problem. Is that a good terms and condition in which I have given loan, where there is no fixed date of repayment? No. So auditor has to comment that if the company has given any loans and advances, then whether terms and conditions are prejudicial, means not correct. Okay. Prejudicial to interest of the company or its members. Second is transactions. I'll just go here. Loans and advances made by the company on the basis of securities have been made with proper terms and they're not prejudicial. Now you tell me, what are the transactions merely represented by book entries? Give me an example. What does it mean by transactions which are represented by book entries? Tell me. Transactions represented by book entries. No, not correct. Transactions merely represented by book entries. Anyone else want to give it a try? Okay, I'll quickly tell. So transactions merely, which means which only exist in books, like depreciation, like provision for bad and doubtful debts. Yes or no? Transactions for which you can't find a voucher. Understood? So transactions which only exist in books, they should not be prejudicial to the interest of the company. What does it mean? Kavisha, this year she's in the mood. I don't want to show a lot of profit. I don't want to pay tax this year. So Kavisha has increased provision for bad and doubtful debt this year 40%. But there should be some logic, na? of giving 40% provision and you're just increasing it because you want to reduce the profit of the company. So is that correct? No. So auditor has to see that transactions that are only represented by book entries are not prejudicial to the interest of the company. Then where the company is not an investment company or a banking company, whether so much of the assets that are shares, debentures and other securities have been sold at a price less than at which they were purchased. So if you're auditor of a company that is other than the investment and banking company, which means a normal company, and if they purchase some shares and then they sold it at less than purchase price, then ask him, why did you sell it at less than purchase price? Okay, so you can have the duty to inquire. Remember, we are talking about duty to inquire. You're supposed to inquire. Okay. Then next you have to inquire whether loans and advances have been shown as deposits. So many people, we know that in Companies Act, there are a lot of restrictions on giving loans. So many people disguise loans and advances and put the heading deposits, which is not correct, which is wrong presentation and wrong classification. So we have to see that if any deposits are shown in the balance sheet, whether they're actually deposits or they are disguised loans and advances. Okay. Next, auditor has to see and inquire whether any personal expenses have been charged to revenue account. This is quite straightforward. And auditor has to see that if any shares have been allotted for cash, whether cash was actually received. Okay. So what is the duty to inquire? Very, very important answer. If you write directly, you'll get full marks. So what is the duty to inquire? Whether loans and advances that has been made are properly secured and terms and conditions are not prejudicial to the interest of the company or its members. Whether the transactions represented only by merely by book entries are not prejudicial. Where the company has sold any shares or debentures at less than the purchase price. Where loans and advances have been shown as deposits. Whether the personal expenses have been charged to revenue account and whether shares have been allotted for cash, whether cash actually received. It seems it's laws more than audit. Yes, because this chapter talks about how an audit report is made using auditing standards and company law. Okay, Abhishek? This chapter is audit report chapter, right? The name of the chapter is audit report. So how the standards of auditing and the law requirements together helps you to make a complete audit report. Is that clear? Because you cannot just study the essay and then if you make the audit report only using essay, you will miss out on the law requirements. So both together you have to use to make a complete audit report. Okay. Next question. Next question is PQR and Associates and M&O and Company. Both firms are chartered accountants and have been appointed as joint auditor of Gamma and Beta Limited. Before the commencement of audit, the joint auditors should discuss and develop an audit plan. In developing the audit plan, the joint auditor should identify division of areas and common audit areas. Explain stating other relevant considerations in this regard with reference to essays. So first of all, you have to identify it is a essay 299 question. Again, this is a direct question. So what does an auditor do? In reference to Essay 299, joint audit of financial statements, before the commencement of audit, the auditors should develop and discuss joint audit plan. In developing a plan, what should you do? First, identify division of areas and common areas. Ascertain the reporting objectives of the engagement, why we are doing this audit. Tell me this. If we are doing stock audit, what is our reporting objective? If I'm doing stock audit, what is my reporting objective? What does reporting objective mean? If I'm doing stock audit, my reporting objective is whether stock is correctly shown and valued. But if I'm doing financial audit, what is my reporting objective? My reporting objective is true and fair view of financial statements. So determine the reporting objectives of the audit that you're doing. Then consider and communicate among all joint auditors factors that are significant in directing engagement team's effort. What does it mean? Suppose you all are my engagement team. Abhishek, Kavisha, Madhu, Om, all of you are my engagement team. Okay. I have decided that you will be the audit assistants for the audit of, what is the name? Gamma and beta. Okay. You will be my assistants for gamma and beta, right? Now, is it my responsibility to tell you where to focus, what to check, where to focus more? Is it my responsibility to tell you that where this area you should properly check? Yes, right? So I told you that GST changed in the middle of the year. Yes or no? Did GST change last 1 or 2 months back, right? Many things changed in insurance company, it changed. So many places it changed. So what will I tell you? That, hey, this year there were a lot of reforms in GST. So you check GST correctly. You check GST correctly. So what does it mean? That when you're planning, it is the responsibility of joint auditors to communicate to all joint auditors factors that are significant in directing engagement team efforts, which means you have to communicate that, let's say the factor was GST, which means the engagement team efforts have to be made in GST area. So this will be the responsibility of everyone. Next, consider the results of preliminary engagement activity and similar engagements performed earlier. It means when you're making the joint audit plan, if any of you have worked in this same company before or this same type of company before, you can bring the knowledge of that and share with everyone. That will help in creating a good joint audit plan. And next, nature, timing, and extent of resources. What does it mean by resources? Manpower, time, means hours. So the next plan we need to do is how many people do we need? How many hours do we need to give to this company? That is called as nature, timing, and extent of resources. So when you are creating a joint audit plan, you have to keep in mind, identify the areas that are common and that are divided. Determine why you are doing this audit. Then determine factors that will affect your efforts this year. Determine what were the results of preliminary engagement activity and other engagements that you performed, and also determine how much manpower, how much time you need, which is nature, timing, and extent, NTE, nature, timing, and extent of resources. Everyone clear? So this question is clear. Next, we'll go to essay question number 10. As per essay 701. What is essay 701? Key audit matters. The objectives of the auditor are to determine key audit matters and, having formed an opinion on financial statement, communicate those matters. One second. Yeah. Communicate those matters by describing them in auditor's report. The factors are taken into account by auditor while determining key audit matters. What factors are taken? How key audit matters are communicated. So first, let me quickly tell you what is key audit matter. Suppose during the year, the company, let's say, acquisition. So company acquired another company. Okay. So for the purpose of that, they did goodwill and valuation and they brought all the assets in our company. So that was a very complicated, complex accounting matter of goodwill, valuation, takeover of assets. All these were very significant matters, right? So this for me were KAM, which means as an auditor, they were the areas in which I applied a lot of procedures. So what does a KAM do? A KAM wants to explain to the readers. So suppose you are the readers, wants to explain to the readers, this was key audit matters and what audit procedures I performed what procedures I perform to obtain sufficient appropriate audit evidence. That is a key audit matter. Means a matter that I considered was the most important matter in which I applied a lot of audit procedures. That is a key audit matter. Is everyone clear? Is everyone clear what is a key audit matter? Very, very important that you understand the meaning. Okay. So key audit matters, which means I want to show off to my readers that see this much work I did. This is how I checked something. These are the procedures I performed to find evidence. So that is called as a key audit matter paragraph. So auditors, usually there is a rule of thumb that key audit matters are determined from matters communicated to TCWG, which means if something was so important that I communicated some matters to TCWG, then it is key audit matters. Okay. So auditor shall determine from the matters communicated with TCWG those matters which require significant auditor attention in performing the audit. Does it mean that this was not done correctly? Or I will write KAM only if I found some misstatement or something wrong in the company? Is KAM only given when there was something wrong in the company or the company has some misstatement or company did not do the job properly? No. Even if everything I found is correct, I can still give a KAM that I checked and in detail I checked. So this is for auditor. This is not for company. This is for auditor to prove how I have done my job regarding something very important. Okay. So remember these 3 points. Which things do we choose as KM? Okay. How to determine KAM? Okay. First, areas that are having high risk of material misstatement or that are significant risks that we can choose as KAM. Then any place that has high auditor judgment because there is high management judgment involved. There's a lot of estimations involved. So goodwill and valuation needs a lot of estimation. So that areas I can choose as KM. And any significant event or transaction that has happened during the period, that also I can choose as KM. So what can I choose as KM? Areas that require a lot of auditor and management judgment, areas that were significant event or transactions during the period. The auditor shall determine which of the matters were of most significance during the current period and therefore they are key audit matters. The auditor shall describe each subheading with a summary matters. The introductory language in this section should clearly state that key audit matters most significance during audit. These matters are addressed in context of audit of financial statement as a whole and does not give a separate opinion. So when I'm doing a KM, I'm not giving an opinion. I'm just telling you how I checked it. That's it. Next. Next is the nature of comparative information that is presented in an entity's financial statement depends on requirements of the applicable financial reporting framework. There are two different broad approaches to auditors' responsibilities in respect of such comparative information, corresponding figures, comparative financial statements. Clearly explain the difference between the approaches, comparative. The main difference is here, the previous figure is read only and audit opinion is only on current period. Even though corresponding figures, which means in audit report, it is always like this, 2023-24 and 24-25. Even though previous year figures are given, my opinion is only on the current period. But in comparative in financial statements, audit opinion is on all periods covered in financial statements. This is not common. This is very special case, but our normal audits only cover, and in comparative financial statements, audit opinion is given correctly brought forward, and accounting policies are consistent, and if not, they are properly disclosed. Okay. Anything related to comparative information is about two things. Opening balances are correctly brought forward and accounting policies are consistent and if not properly disclosed. So this is your basic overview about essay number 710. Now let's see the question. It is asking us that explain differences between approach in corresponding and comparative, and mention what is comparative information and audit procedures. So let's see that. The nature of comparative information that is presented in entity's financial statement depends on the requirements of your AFRF. There are two main approaches, corresponding and comparative. The essential audit reporting difference is that the corresponding figure audit opinion is only for the current period, and in comparative, the audit opinion is for each period for which financial statements are presented. Definition of comparative information. Amounts and disclosures included in the financial statement is in respect of one or more prior periods. The auditor shall determine whether the financial statement include the comparative information required by AFRF and whether it is properly classified. The auditor shall evaluate whether the comparative period agrees with the presentation of previous period. So, if last year there was staff and welfare expenses, so if you want it to be comparable, then whatever was included last year in staff and welfare should also include in next year. So that is what it means, that the comparative information agrees with the amounts that were in previous period. And the accounting policies reflected are consistent with those applied in current period. And if there has been any changes, it is properly accounted and disclosed. That's it. This is essay number 710. Mostly, this is the complete question. This is the only question that usually comes from this essay. Okay. Now let's come to this. Kiran, a CA student, was reviewing audit report of the company when she noticed an 18-digit alphanumeric code below auditor's signature and membership number. She wants to understand the purpose and importance of this randomly generated number as unique code. Now, is this code required by audit report only? What are we talking about? What is this 18-digit alphanumeric code? Abhishek has given the answer. Very good. This is UDIN. What is the full form of UDIN? Unique Document Identification Number. Why was this created? So what happened? Imagine yourself that you are bank, okay? Let's imagine, Abhishek, you are a bank officer, okay? I am a company. I have gone to you with an audit report in hand and it mentions Mr. A as auditor and he has signed the audit report and you are the bank. Now you want to confirm whether Mr. A has actually signed the report, whether Mr. A is actually a CA, whether Mr. A actually has this membership number. So by having a UTIN on each these reports, what can Mr. Abhishek do? He can go to the ICAI portal, he can put the UTIN number and he will know who signed this report, when it was signed, because this number can only be generated by a chartered accountant. Okay. So what it prevents any kind of people falsely representing themselves as CAs. Okay. And is this code required for audit reports only? Quickly tell me, is this required only for audit reports? Everyone tell me, is this required only for audit reports? No, it is required for audit reports plus any certificates. So basically, wherever we give assurance in audit reports or certificates, we have to put a and generate a UTIN. Everyone clear? Very easy answer. So the 18-digit alphanumeric number noticed by her at the end of the report is unique document identification number. It is a system-generated unique number. It was noticed that the financial documents and certificates are tested by third persons misrepresenting themselves as CA members, were misleading the authorities. ICAI also received a number of complaints of CA signatures being forged by non-CA. Non-CA people are mentioning themselves. I don't even know. There are 5 audit reports floating in my name. Someone has found my signature, found my membership number, and writing my name and number and doing the audit reports. To curb the malpractices, ICI implemented the concept of UDIN, Unique Document Identification Number. Chartered accountants that have full-time COP can register on UDIN portal and can generate UDIN by registering certificates attested and certified by them. An auditor is required to mention the UDIN with respect to each audit report being signed by him, along with his membership number while signing the audit report and certificates. It is required for both audit reports and certificates. Everyone clear? Everyone is clear? Okay, now I'll quickly do this, a few questions, nothing much. I have covered all the essays. So I have covered essay 701, 700, 705, 706, 710, 299, CARO, and audit report sections like section 143. Okay, so all of this has been covered. All the basics are covered. Just 1 or 2 extra questions we'll do, and then we can conclude the session. Okay. So TS has raised funds. Okay, he has gotten funds, TS Limited. Then they have issued fully convertible debentures. These funds are raised for expansion and diversification. This is the purpose. What is the purpose of raising funds? Expansion and diversification of business. The company has clearly outlined in its board's resolution that these funds will only be used for business expansion and diversification. However, the company utilized these funds for repayment of old loans rather than the intended purpose. State the reporting responsibility as per clause 10. So clause 11 is fraud. Before that also some wrong thing has happened. That is clause 10. So what does it say? That if you have raised money by IPO or FPO, okay, whether you have applied it for correct purpose, if not, details of delay and default and rectification. So if you have raised money by IPO, FPO, whether you have used for the correct purpose, if not, auditor has to give details. If you have made any preferential allotment or private placement of shares or debentures, you have to see whether section 42 and 62 compliance has happened, compliance. Plus, you have to see whether they were used for correct purposes. If not, you have to give the details of the amount and non-compliance. Is everyone clear? Very easy. Okay. I want to do this question with you. Again, Caro question. Measures PQ Limited has a turnover of 807 crores during the financial year 2023-24. It has outstanding dues of GST of rupees 10 lakhs since 2023. When inquired by the auditor, the company's management informed that they have filed an objection letter for the demand with GST authorities. However, no response is received. State the reporting responsibility of auditor under paragraph 3, clause 7. Now, this is regarding statutory dues. Statutory dues. Statutory dues are 2 types: undisputed and disputed. What is undisputed? I have collected professional tax, I have to pay professional tax. I have collected TDS, I have to pay TDS. There's no dispute. So statutory dues which are undisputed and which are outstanding for more than 6 months on balance sheet date, auditor has to report it. So if something has been outstanding for more than 6 months, we have to report. Next is disputed. Here in this case, the government is saying you have to pay 10 lakhs, but the company is saying, no, we don't have to pay these 10 lakhs. So the matter is now disputed. So if there is disputed statutory dues, you have to give details that how much amount is pending, since when it is pending, where is it pending, why it is pending, all these details. So here the answer is simple. Reporting responsibilities as under, auditor is required to report that whether the company is regular in depositing undisputed statutory dues, including GST, Provident Fund, employee state insurance, income tax, sales tax, service tax, etc., to appropriate authority. And if not, the extent of arrears of outstanding statutory dues as on last year financial year for more than 6 months. Okay. Further, the auditor is also required to report as per clause 7B when statutory dues referred have not been deposited on account of some dispute, then the amount involved and forum where the dispute is pending shall be mentioned. So you have to make like a table that here and all the disputes are pending. So there can be multiple disputes pending in a big companies. Everyone is clear? Okay. So that's it for today. I hope you understood, you enjoyed the class. Yes, Kavisha, I'll definitely try. I'll discuss and let you know. Okay. Everyone, I hope you enjoyed the class, you understood. Ma'am, is there any similarity between KAM and EOM? No. No. Okay. EOM is about management has disclosed something. I am highlighting it. So, for example, this is already written, right? The solution in your, can you see the solution on your screen, Abhishek? You can see the solution on the screen, right? I'm just highlighting this. See this undisputed word, Abhishek. See this disputed word, Abhishek. That is EOM. Something is already there and I am just highlighting it to bring attention of the users. That is an EOM. What is KOM? How did I check this? How did I check the statutory dues? Did I check notices? Did I check all the legal files? When I mention how I checked something, what audit procedures I performed, that list is key audit matters. Is that clear, Abhishek? All right. Anyone else? Any other question? I don't think there's any other question. Okay. I don't think there's any other question. Technical team? Yes, Abhishek, I'll definitely discuss and we'll do it. So I think we can wrap up and nice teaching you all. I hope you also enjoyed. We can end this class now. Technical team. Is technical team there?